So thank you so much.
Dear delegates, it gives me a great pleasure to welcome you all to the third edition of the world's largest FinTech Fest, Global FinTech Fest 2022, organized by National Payments Corporation of India, Payments Council of India, and FinTech Convergence Council. This edition of the fest is supported by Department of Economic Affairs, RBI, and IFSCA. My name is Amla Agarwal and I'm your host for this session. The topic of our discussion is not just a topic but also a very important question. So it sounds like how regulations will redefine Indian fintech. Well, it is also a part of this special session. We're very glad to have an esteemed speaker lined up for the same. Very happy to have you with us today, Dr. Amar Patnaik ji, Rajya Sabha MP, Odisha. So, sir is joining us virtually, and also we have Mr. Naveen Surya, Chairman, Fintech Convergence Council. Please join me in welcoming Dr. Amar Patnaik, who will take over from here. Thank you.
Welcome, sir. We look forward to your address. And if time permits, we'll take one or two questions as well. Thank you.
Thank you so much, Naveen, and thank you so much to the Global FinTech Fest. I wish I could be there physically. I would have loved to be there, but time constraints really didn't permit me to be there. However, I thought this is an extremely important issue to be discussed in the kind of conference that you have organized, which is one of the largest in the world, and particularly in a country like India, where our fintech growth or the fintech revolution, the word that I would use, is very different from the way it is happening elsewhere. Yeah. We are, of course, the second world's second largest, but very importantly, you would realize that the population that is adopting the fintech, they have two deficiencies. One is digital literacy, and second is financial literacy. This is very different from other parts of the world. And even more strangely, the people whose financial literacy is inadequate, they are probably better literate digitally. It means they are able to exploit the applications and apps that are available and make use of the fintech solutions that is being provided by various startups and the innovations that is coming up in the horizon, even though they are not financially literate. So I would flag these two issues very importantly in any kind of regulation that we make in this country, and that is number one, everyone has a responsibility now to increase digital literacy in our country. That would make the market more orderly, more responsible, and the growth would be much faster and much more organic. The second one is which is very deficient in the country, even in normal circumstances, is the financial literacy. So that should be also a part of any regulation that you make. So the growth of our fintech is very different from others because it is leading to financial inclusion, which is one of the goals of our public policy year after year, and which will continue to remain so. And therefore, our regulations could not cannot be having a solution abroad or a solution beyond India. Of course, we can learn from the regulations that are there elsewhere, like in UK, for financial inclusion, for better penetration, better coverage. But our solution will have to be unique based on this concept of improving digital literacy, improving financial literacy, and at the same time, of fostering innovation. Now, when I talk about fintech, I was just having a look at the people who have spoken, who are about to speak in your fest, and there are so many issues which are being discussed, which are very germane to the growth of this sector in this country. But as far as the regulation is concerned, the topic today was how regulations will redefine Indian fintech. In fact, the important thing which is being discussed is whether the Indian fintech growth that is taking place will redefine the resolution, the regulations. Both the things are actually didactic in nature. They are important. And when we talk about regulations, the important thing is I will very quickly mention, for me, the regulation should be adaptive. It should be not just regulate and forget. So you grow with the industry, you regulate with the industry, you have some broad principles, but the rule making should be left should be left to the government, which could do it very fast, could actually go to the market very fast, because legislation in India takes a lot of time. So the principles should be laid out. Then the regulatory sandbox approach should be widely kind of put effect to. We have recognized that this is important. This is the way to go forward. But you'd be surprised to know that when I ask questions to from various regulators as to how many sandboxes are they promoting, who are the people working, you would be surprised. I'd not like to take names, but very few. So I think we have to adopt that as a major approach, and we may probably have to foster private regulatory sandboxes as well. I'll leave it at that. I'll wait for the questions later. Then the regulation should be outcome based. The third principle, it should not be more form based. Substance is more important than form. Very often our regulations are more form based. That's a British legacy that we have inherited, but we have to move away from there and have to go in for an outcome based regulation. The R regulation should be risk weighted. It should not be not one size fit all kind of a strategy. We need to have different strategies for the for the startups, for the people where women are probably involved in the rural areas, where the students are involved. So the risk has to be weighed, and it cannot be a one size fit all strategy. And for that, you need to analyze the data. You have to need the vulnerabilities and threats separately. The last point on regulation, the pillars of regulation, the fifth point is collaborative regulation, which means that we have to collaborate together, not just domestically, but internationally. We have to co-regulate, we have to probably self-regulate and build in international coordination. Now, these are the 5 principles on which I would say any kind of regulation of the fintech sector should grow or should develop in the country. This is a prescription, not just for me or for you. This is a prescription for the government. This is a prescription for development of the entire ecosystem. To very specifics, because I have very less time. So these the specifics are this, that while the open banking, let me take an example. Open banking would be a great one for building financial inclusion. And I look at it very differently, because we are going to have a privacy law coming. Now, when a privacy law is coming to a country where digital literacy is inadequate, it is better that the passwords, the username, they remain with one agency and he doesn't have to do it so many times. So it's actually, open banking is a great way of achieving financial inclusion and privacy by design. That's the way I look at it. And that's how the regulation should be fostered. Then I look at the other 2 services, which is the insurance. I think that's what, in a country where the penetration is one of the lowest in the world, even in Southeast Asia, where the density is also one of the lowest, I think insurtech is something that we will have to promote in a big way. And once again, the advantages are risk-free underwriting, on-the-spot purchasing, activation, claims. There are several ways in which the benefit can flow down to people. But the principles of regulation are those 5 basic principles that I mentioned. So I'll come to the specifics of, since we're talking about fintech, where the RBI is the regulator. We do not know if hybrid regulators would emerge later, depending on different kind of innovations that come up, just like the one we're discussing on crypto. But I think for ease of doing business in the country, the regulations and laws related to taxation, registration of startups, and investments need radical reforms, even now. This is a prescription that I would like to mention for the government to take note of. And then the standardization across states is very important. Every state is following a different model. Someone are the marathon runners, and someone just are the laggards. So I think we need to have a standardization. Attempting innovation in motion, that's very important. Because regulators can adopt innovative practices, such as testing the use of blockchain for contracts with fintechs using sandboxes, solutions developed through sandboxes by employees at regulators' offices Now, these are some of the new ideas that have to be thought of. Then the linkages to other objectives. Very often, we find that the government works in silos, and this is what uh, the the whole the performance of a fintech solution would probably be not unlocked unless these departments work together. And that is where I think government will have to do quite a lot of work. That is, if it is a tourist spot, then the tourism department will have to work with the insurance department. You see, traditionally, government has functioned in separate silo kind of departments. The any kind of technological disruption is trying to break that away, and that's where the conceptually and at the mindset level, behavioral level, this change has to happen, and the regulation should reflect that. And therefore, uh, any kind of innovation, we have always believed that it has to be a soft touch regulation, but you can have soft touch regulation. You can't have soft touch regulation in only one sector and have a hard regulation in another sector. And that's what I think the government has to take note of. Then also reforms in the allied industry segments, shift in the cultural mindset of the country. And most importantly, the regulators have to talk to each other. The regulatory arbitrage possibilities should be removed. In a sense, I use four words: that if regulation is in, the traditional belief is to use it to trap the industry to perform better. I look at trap differently. T is for transparency, R is for responsible. A is for accountability, and P is for predictability. In fact, the traps should be to be more responsible, should be to more predictable, more accountable, and more transparent. And that's what the new age regulation has to look like, and that is what the fintech will affect, and the regulations will also affect fintech. Therefore, both should work in harmony. Thank you so much. These are the broad principles I mentioned. I would love to have some questions.
Couldn't have been, sir, better said than what you said in a shortest time possible, and that is what the industry would love if these are what are under consideration, and if since regulators are also joining, they start following it. Just two quick questions, sir. One is there is a thought process around the way the digital drives convergence, and you already talked about it, that the regulators also needs to converge. Do we see that in happening? Because the reality is that today in financial sector, the most model are where a fintech owns the customer and wants to cross sell every other service. And without that, again, if you want to create an inclusive market, it is also not feasible because the middle class population and a bottom, the ticket sizes are very small. So unless you're able to sell insurance, bank accounts, unless you're able to give them more services, doesn't. So do we see some convergence there also, or some sort of a informal setup where RBI works with others, and there's a clear, to give a simple example, the KYC prescribed by different regulators is different, though PML is original. So any views on that, sir?
Very right, and absolutely right. That's what I was referring to when I said that you have to collaborate. That is the main principle of regulation, and the government departments have to change their behavior. The regulators have to change their behavior, change their way of thinking. Now, for example, a man at the grass in tier 2 or tier 3 city, he wants to minimize his transaction cost both in terms of money as well as time, because he has to go to the field, he has to do a number of other things. And with one transaction, if he can get a banking, lending, a loan, he can get get his credits to his account. He can get insurance, life insurance, as well as a fasal bima. I think that is the kind of package he's looking at, and that can only happen. You can imagine 4 different departments are operating here. So the departments have to converge. The data is with them. The regulators have to converge because they have to regulate this particular app. Should it develop, and this is what the direction has to be. Otherwise, what would happen is that there will be a fatigue which will be setting in. We can't go to the old system of the person doing everything again separately, and then the fatigue will set in, and therefore the idea should be to reduce, in one word, reduce the transaction cost both in terms of time as well as money for that particular person in tier 2 city or even tier 3 city or in a rural area who is getting different services from government, from banks, from insurance companies, from Fasal Bima authorities, and from even for selling his paddy, for which there is a separate application which is being used by the state. Now, if he has to do again that separately in the mandi, what the full potential of the fintech solution is not unlocked. And therefore, I think I see a great opportunity for fintech, of course, in India, but I think a greater regulatory capacity improvement is required.
Required, yeah. So one just last quick question. I think we have just about 2, 3 minutes. Sir, today the fintech industry is led by innovation. Something identified, something drives the business, and then the business starts. And then it is, if it is good, then it starts growing. And that is the time currently the regulatory intervention happens. Because again, like you said, the way the system works, it always takes time, and it's not just in India, globally. And currently the focus is the customer protection, which is the right one. Challenge happens is that sometimes in the name of customer protection, we actually either shortchange the inclusivity, or we ends up, let's say, creating something in a favor of a larger existing monopolistic player without realizing that why they were getting prescribed. To give you one example, today the credit card industry is limited by 8 or 10 players in the market, and there are all kind of challenges. We see all kind of new products emerging from a fintech. In the reality is that if you give a formal access to such products which are driven by technology and by lending ability, which is there to NBFC, then a lot of this convergence can happen. How do we deal with this? I mean, these are again a moving vehicle. There's no easy prescription for this. But I thought, since with your experience, if there's some guidance on this.
No, it's true, very true. In fact, you see, you talked about NBFCs. 94% of the credit to the micro and small sector is going through NBFCs. The regulator had a problem with the NBFCs because of the prudential norms. They said that they are very weak, capitally inadequate. Therefore, we must do something. Now that they have been brought into the prudential norm framework, in fact, I asked this question in a parliamentary committee recently. That recapitalization that you're doing of banks, we have to move away from this. We probably would think about strengthening the NBFCs. Now, that's a different. This is not really fintech, but then this is the kind of outlook that you need to have. Now, once you have that, then the seamless development of applications between a banker and between an NBFC and between the subscriber can happen. But if you are very stringent on regulations upfront, when the product is not even moved up in the S curve to some extent, you are creating monopolies, you are creating unnecessary entry barriers, you are increasing the transaction cost for everyone over there in the system, and it is becoming inefficient. The idea is that the efficiency in the market comes only when there are too many players, and we already have too many people looking up to it. Only the suppliers have to be too many. I find this is where we are. I think we need to do more in India, and that is we need to have very, very soft touch regulations. The regulatory sandbox approach should be really extended when the product really matures. Now, if you bring in the regulation at the lower end of the S curve, then the product may not really actually be a success, and it could actually create hindrances for others to join in. We are very happy about the unicorns that we have had, but I think we have the potential to have many, many more unicorns.
Yeah, yeah. No, I think we could go on, but thank you very much, sir. I think over to the session host.
Thank you so much. Thank you. It's a pleasure. I wish I could have spent more
Thank you
time.
very much, sir.
I think some other time. Thank you so much.
Looking forward.
Thank you,
Thank you
Dr.
very
Amar
much.
Patnaik, sir,
Thank
for
you.
joining us for this session and actually sharing your expertise, this knowledge with us. It was great to have you with us.
Thank you.
And thank you, Mr. Naveen Surya, for joining us
Thank
for
you, sir.
this session. It was very encouraging for us that you are a part of our session too.
Thank you again.
Thank you.
Naveen.
Have
Thank
a
you.
safe travel, sir. Thank you, sir. We'll be in
Thank
touch.
you.
With
Thank
this,
you.
we would like to bring this session to an end. It was an enlightening discussion with these two gentlemen where we got a lot of insightful information, and it was an honor to have you both right here. With this, we'll end this session and we'll move on to the next one.
Thank you.
But before we do that, we would like to thank our partners and sponsors. Team partner WhatsApp, co-powered by Amazon Pay. Spend management partner Encash in association with Perfume. Payments partner Cash Free Payments. CEO's dinner partner HSBC. Communication partner, Kalria. Banking partner, Standard Chartered Bank. Diamond Partner PayU, AWS, Kia.ai Infrasoft, Paytm, Networking Partner Buddy Loan. So with this, we close this session and see you in the next one.